Hello again, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and let's unwrap today's market price action. It's a Wednesday, February the 21st. Let's do a quick top-down analysis. As always, take a look at what's happening in the broader markets, break it down into currency baskets, and then take a look at possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at our market analysis today, let's just jump right into the headlines. And again, it was a very quiet day across the board. Equities flat for the day, even though we were more seeing weakness in the markets. They did recover by the end of the day. U.S. bond yields are rising, but we are not seeing the dollar rising at the same time. So dollar remains range bound. So a lot of the currencies are just doing its own thing and stuck in this range and not really moving significantly one way or the other. And you can see that in the percentage change overall. The Swiss franc 0.23, Kiwi 0.23. So remember, we want to see things more than 0.5%. And this week, I think the common theme is that the biggest move we have seen is like 0.3 to 0.4. We haven't even seen a breach of the 0.5%. You can see a lot of the currencies were just sideways. Pound, euro, CAD. The yen did weaken 0.26%, but again, that's just the best movement you're getting in these market conditions. Now, looking at the broader markets, you can see similar theme. The S&P slightly higher, World Stock Index was flat. Cryptos were down, so we're seeing a little bit more profit taking happen in crypto, but gold is flat, and we're seeing the oil rising slightly higher. So I think I'm seeing a similar theme across the board. Take a look at crypto. I know Bitcoin and Ethereum has been doing the best, and they did pull back. So seeing some profit taking there overall, but nothing has really changed in the market as far as our outlook goes. We're still sitting at a +3, and if we take a look at the chart here, what do you see? You see some consolidation. We are a step above this 20-day moving average. We talk about how we would need to see a break below that to really change our score and change some of that market movement. But right now, everything is supported at this level. So we'll see what happens. We're at the bottom of the range. This is the top end of the range. We can likely go back and forth unless we get a good catalyst that could break us out of this range. Looking at our schedule for the week, this is a quieter week overall as far as the news event goes. Tomorrow, next 24 hours, we have important data coming out from both the US, the euro, and the pound. The services and manufacturing PMI numbers, I think that will have an impact on the US dollar and the euro as well. So those are the pairs that we'll be paying close attention to. Let's just jump into our currency analysis. Take a look at the velocity score, and you can see nothing big has moved. The only thing that really changed is that Swiss franc was really weak, and it came at a +2. But overall, just remember that Swiss franc is still showing a relative weakness on the daily chart. So we'll take a look at a shorting that bounce in the Swiss franc. But outside of that, really nothing has changed as much. CAD and the dollar right in the middle. Aussie showing more weakness, especially compared to the Kiwi. But really, that's about it. Yen is continuing to be on the weaker side as well. So remember, as long as you're trading over the direction with the trending score, you're probably getting more winners than losers because yen, all those pops are good shorting opportunities. We're seeing the Kiwi, all the dips are getting bought out, and even Swiss franc now with this little short-term rally, I think we probably want to see a bit of a rollover in the next 24 to 48 hours. So let's just jump into our possible trades ahead and take a look at what's the best setup here.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So looking at our setup here, I'm just going to start with the Swiss franc. In the shorter term, realize that we're just getting a little bit of rally. We were a little bit more weaker. We're getting a bit of a rally, but that rally is what we want to short into. So I'm not seeing a sign as of yet, but on a daily chart, yes, even though if we can get closer to this level, I would love to kind of go short on that level. But right now, it's not showing any sign of slowdown. You can see that outside of that, the dollar still range bound, still holding the resistance, which is now the support. So right now, I would rather play the dollar on the long side than the short side. But again, realize that this is a choppy price action. You don't want to trade the chop. You want to trade when things are moving higher or lower. And right now, I just don't have a signal yet. Yen, on the other hand, continue to look weak. So perhaps we can take a look at yen crosses. Kiwi is the one that actually been doing well. Take a look at the momentum. The velocity has been moving higher. So getting a bit of a pullback. Maybe this is the one that I want to buy into. But not so much with the Aussie. Aussie is showing relative weakness. And we can take a look at that relative weakness in the Aussie-Kiwi pairing. Take a look at how consistently we have been weakening. We are back at the levels that we were here. And at this point, if we break that level, we want to be seeing more weakness in the Aussie compared to the Kiwi. So that's really where we are at. We want to be focusing on what's moving. Canadian dollar had a big drop yesterday, but you can see it did not go anywhere. So this is the kind of markets where if things are not going anywhere, look at pound. We don't want to be chasing anything. We don't want to be trading this chop here. We want to be trading when things are moving. So perhaps next 24 hours, maybe we can get a move off of those PMI and services PMI numbers and the manufacturing numbers. The setups that I was looking are still the same. A year Swiss franc still like it to the upside. And this is just in a consolidation phase. But I like to buy a bit of a pullback here and maybe put a stop right below this level. We can also take a look at dollar Swiss franc. But right now, again, not really going anywhere. So let's just put that on the side burner here. We can still see good opportunities like Euro Aussie on the upside. I mean, this thing could go higher if the Aussie stays weak. But right now, with the Kiwi, I think Aussie Kiwi looks like a better pairing on the short side. And we can also take a look at Kiwi against other currency pairs. Like I said, again, all these Kiwi crosses are getting bought out on these dips. So that's really where we are in the markets. Economic data, again, will be in focus. Nothing has changed. Swiss franc yen on the short side and Euro and Kiwi on the long side. That's just a trade that's working, but realize that ranges are small. You know, you're not getting a whole lot of volatility. At the same time, you know, you're not getting a huge movement one or the other. So stay on the higher time frame, trade the right time frame, and make sure you have a reasonable timeline for your trades to develop. Thanks for joining, and we'll guys see you in the next update. Cheers.